You're watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everyone. It's Wednesday, another episode of Master Trader Live. And we've got a timely one here with these markets that have basically crashed in a very short period of time, with a lot of the broader markets and a lot of sectors having dropped from the February high to the February low around 15%, give or take, which ones you're looking at. I mean, even the utilities dropped about 15%. So, this virus scare has definitely shaken the markets. And as you know, the Fed lowered interest rates yesterday to try and combat that. It was all whipsawed around. And, so that volatility has played some havoc with a lot of patterns, especially on the daily time frames, and have put the weekly even in question as to whether it'll break or not. And the markets have been chopping around back and forth here, trying to figure out, is this actually the low? Does it retest the low? Does it make a lower low? Does it keep going down? So when you see markets and patterns start to whip back and forth in a very erratic way, it communicates a tremendous amount of uncertainty. Whereas as things started to drop after the first week of February, there was very little uncertainty. The majorities were in agreement: sell, and keep selling. And whoever was on the bid got run over until these various markets reached relatively, low levels of price support. We can go over some of them, but there are opportunities to be had. Now, not the same opportunities that there were before, obviously, because things were in a nice uptrends and there were tons of swing trades where prices either were breaking out or pulling back. Nonetheless, while we were staying with those that were showing relative strength, we made our subscribers well aware that this was potentially a dangerous market. And I can't tell you that we expected a drop like what happened, but in even the beginning of January, we were saying breadth is deteriorating here. The wrong way option traders are betting this market is going to explode higher. And there were periods where it actually looked like that was going to happen until, there was a breakout failure. Things began to deteriorate. So we had the warning signs. And so, we start tightening stops and so on to protect as we should. So now the question is, are we at a bottom? Well, we are at some type of a bottom. Whether it's the bottom, I don't think we actually know yet. But again, we look to our internals, we look at price patterns, relative strength and weakness in multiple time frames, and we come to an educated decision when it's appropriate. So that being said, let's look at a few slides and what's going on here today, and let's determine what's going on. Hey, Dan, you got my shirt on, man.
I was going to say, beautiful blue shirt you got today. Yeah, hey, Greg and listeners here, welcome to another great episode. And as Greg said, this is extremely timely. And Greg, I'm sure you got the email, but we get so many wonderful testimonials. But one we got today was a gentleman said, "Hey, I like your recent one," and he used the term trading the right edge, meaning we had an episode where, look, we're gonna show you the master trader method. We're gonna go down to a 1 or 2 minute chart, or we'll go back 6 months, and we're gonna show you bar by bar what we would have done in the moment. So today, not only are we going to show you exactly how to profit trading stocks and options during market crashes, they're one of our absolute favorite times, in particular, to sell these overpriced put spreads. But we're going to show you what we've been doing over the last couple of days. And as Greg said, what we're going to look for to make even more money if different scenarios set up. So for those of you who have been with us, you've seen this slide before. Our approach, there's many ways to skin the cat, but our just no-brainer objective approach, we're looking for a high probability setup on multiple time frames, using the other concepts that Greg mentioned there, trend, support and resistance, relative strength, weakness, broader markets. And then we just enter the trade and manage in between. It's really that simple. Let's hold off on the three-legged stool until we show you our chart on the market internals. But this is a term Greg came up with, and it just increases the probability of looking at price action in isolation. We're going to look at the market internals and intermarket analysis to give us a better opinion on future direction. Whether you're swing trading or day trading or even long-term trading, when we look at the charts of the crashing market right now, we will answer this for you when we look at real charts, as we always do, 45 minutes or so into the program. We've been having amazing day trading setups, both long and short. As Greg said, the daily charts, unless we find something, how we say it's on its own page, showing relative strength, it's been difficult to find compelling bullish setups. But I'm going to show you a bunch of option trades that have been fantastic. And is this a time to go core long? Greg said, I don't know yet. We don't know, but we're going to tell you exactly what we're going to look for in different pictures. So we're ready. Greg, why don't you tell them about candles here and thought process? You're the one that said candles and patterns are pictures of people's emotions backed by their pocketbook.
That's true. So, candlesticks create pictures. We can do it with a bar chart, but the candlesticks just, make things clearer for most of us that learn to read them. And it's really not about saying, the way the majority of books are saying, where they piercing patterns and dark cloud covers and haram eyes and so on. We really keep it simple to say, is momentum increasing? Is it decreasing? What's the size of the bar relative to the bars that preceded it? And once we have a pattern, remember, a candlestick is one bar, or it could be three bars that produce some type of a pattern. It may or may not be meaningless. It all depends on where is it within a trend, or is there a trend, up, down, or sideways? And what's the location, support or resistance, or is it in the middle of nowhere? So it can be a continuation pattern. The other thing that we like to make everybody aware of is that when we start talking about candlestick names from the perspective of, the accepted ways of the names that I mentioned, well, you can change time frames and all those pictures begin to change. So we show you how to read that and understand what's happening in multiple time frames. So these pictures create thoughts, right? When you see a pullback to a rising moving average within an uptrend and it's on support, and you see, what we call like a bottoming tail bar, and it's like, oh, buyer stepped up, that's a place to buy, plain and simple. What happens after that bottoming tail bar? So the bar by bar analysis is, okay, now I have a trend and I've got a pattern, I've got a signal, and the bars that now come after that, are they in agreement with it? Does it question it a little bit? Does it totally blow it out of the water? Like, Dan is showing there on the lower right, whereas, you had a big green candle and it's like, yeah, this is going up. And all of a sudden, what the hell happened?
Well, Greg,
so you can feel that.
And I was going to say, this is a perfect stick figure for today. When we show you the pictures of the spiders, that's what happened. We had a big, beautiful green bar 2 days ago, followed by this ugly red bar yesterday. Today, the day's not over, but we'll look at it live.
Right. And everybody's trying to figure out what the hell is going on. The big down day, and now it gaps up several hundred points, and now it goes back down and it comes back up, and everybody is like, oh my God, please, where's the aspirin? And it's like, this is the craziness that's going on right now. Yeah.
Right. So this is what we refer to as part of our top-down analysis. And that's why, we all love trading, because we teach the skills and methodology to be able to assess where opportunity is in any market of the world, anytime a liquid market's open. So pretend we took 3 weeks off and now we're, over in Europe somewhere. This is the same approach we do. We fire up the computer. We're going to look at the broader markets. We're going to look at the sectors. We're going to look at the market internals. Greg's going to intermarket analysis, see what's going on with the oil market, currencies, commodities, transports. And then based on that review, which, we could do that in 5 minutes if you're skilled at it, then we have a bias. We have a market bias.
Yeah. So what we're looking at here is what's in our ETF letter every weekend, where we go through about 25, 30 different sectors in the broader markets. And we say, looking at the trend in multiple time frames. If the monthly, weekly, and daily are all up, well, obviously that's pretty powerful versus are they all down or are they mixed? And one of the things that we look for, and let me just see if I can get. All right.
So are you saying they don't look like this now?
Not at all. But so, in a situation like this, whereas maybe on the daily chart, so this is showing the prior week and this would show the current week as we would be looking at it. And, same thing on the weekly, and the monthly doesn't change very much. But at times, so everything here is in an uptrend, and this might go to a sideways trend. And because everything is up, that could be a buying opportunity. Of course, we have to look at the charts. Now, if, say, this went to sideways, which the following week, this would be marked sideways. And then if this gets marked down, well, maybe it's going to deteriorate into the weekly time frame. So this matrix gives us a visual what's happening across a whole lot of markets. And so I'll color code these as to, hey, these are green light and this one's becoming questionable. And, at the time, these are red, just stay away unless you're looking for shorts. And so as this changes, it gives you an insight as to what's happening across many different markets and sectors and, where money's flowing into and out of.
Now, this I'm just showing you definitions and how to use this. And then we're going to show you what this looked like for the last couple of days. And then when we look at real charts, maybe Greg can show you where they're at now. But these are our market internals, and we keep them very, very simple. So sentiment is this top one here, and it measures a moving average here of what we call the wrong way option traders are doing. So it's the SPY, the S&P 500 ETF on top. When markets sell off, like they're doing now, then the wrong way option traders are rushing to the option market to buy puts for protection or speculation because they're fearful. So when this gets to an extreme, and Greg has these bands that adjust in bullish and bearish environments, but when we get these two in alignment, the bearish sentiment and the bearish breadth, which is the 5-day McClellan oscillator, we keep things simple. When they're both in the lower bands, their job is done, and we're looking for a bullish entry using candlesticks and patterns. And you can just see how historically that these are dead on. And Greg mentioned the warning that we got at the high. They work in reverse also when the market's overbought and the wrong way options traders are too bullish.
Just go back to that for a second, Dan, because it's an important point that they have to be in agreement, meaning one being at an extreme and the other one not, doesn't give us a warning or alert that risk is rising or opportunity is increasing on one side or the other. However, in the current market environment, just before the drop, I think I mentioned before, was that what we finally call the wrong way option traders, they were so loaded on call options, bullish bets that the market was going to go up, that everybody was, on one side of the boat, so to speak, and nobody cared, right? You remember it was buy the dip, buy the dip, buy the dip. And I mentioned, I don't know how many times in our newsletter or in the green trading room, I said, look, guys, I know this market's going up, but this deteriorating breath, this was actually, going kind of like this, making lower highs. And this was like up here. It's like, geez, there are, less and less stocks participating in this advance. That's a warning sign. I mean, even interest rates were starting to give us warning signs where the yield curves on the very short end of the curve were inverting. And I'm kind of like feeling myself, I'm saying, hey, be careful here. And the market's going up, not looking very good until all of a sudden, everybody caught a cold. And
yeah, we were saying for 10 days, hey, we're going to trade bullish patterns because price controls, but keep your eye for the exit door, because when it happens and we have these danger signs telling us that it was fairly imminent, and it was. That was a great call.
Jason, I don't look at trend anymore. I've kind of narrowed things down to just these on a day-to-day basis. Intraday, I'm not following it really. I'm just looking at the tick and, what's happening in the broader markets, the NYSE tick, is it hitting an extreme or is it just neutral? And skew is just something that I have found to be extremely misleading and just of no real benefit whatsoever. So no, I do look at the put call ratio, which is that sentiment that we're looking at. I do look at it intraday. And one of the things that I said in the green room today was like, wow, it's up at 0.2, which means they're buying an overwhelming amount of puts. So even when the market went down and looked like it was going to crater, and I was short and covered some of that, and then got stopped out on some, I said, this is going to put a floor under the market that, all of these wrong way option traders are betting that the market's going to crash now. That's exactly what happened. And the market is still just chopping around here.
Yep. So in a number of these slides, I'm going to go through quickly for you. This is just showing you the S&P ETF and the VIX, VIX, the SIBO Volatility Index. You can't trade this, but that's what CNBC shows you on the ticker. Hey, the VIX is XYZ. So I'm going to show you in the next slide where the market internals were, the breadth and sentiment, but we also look at VIX at extremes like this. And we were wanting this thing to blast to an extreme, and that's exactly what it did. Look, it blasted to multi-year highs on this last week's collapse. Same chart, just a weekly here. And you can see this is last week's bar, folks. We're in the middle of this. Blasted up there to the 2018, fear, the 2015. So we're in. This is just visually telling us, and confirmed by this chart now. This let me go back. See this 2018 low? Right here, folks, 2018. This looks horrible, doesn't it? It looks horrible. It broke down. It's on support though. This picture right here is why we told our traders, if you're going to short, it better just be a day trade. We're down, 9-10 bars on volume, and we got our breadth and sentiment in alignment. But again, that's 2018. Now let's look at last week with the market crashing. Greg, why don't you take it? So this is the spiders as of last Thursday, and this is what they look like.
Yeah. So now they've come up a little bit, and let's see here. Yeah, so this has come up not much. It's probably around here. And, this, I can't read that at the bottom, but it's come up a little bit too, which really doesn't tell us anything at this point. We already got the extreme. So, the market's bounced, and that doesn't mean the market's going to go straight up. It's not, because after a drop like that, you don't fall off the 10-story building and get up and run. It's got to repair the damage by going sideways for a while and whipping around. So it may take a very long time before it comes up into this area. And historically, what this would do, just kind of read this again here.
But the daily chart looked horrible. And that's just one message I want to highlight, that turns, don't happen clearly where a bell is rung and saying, all right, it's now time for you to get off the train and go the opposite direction. So when we get turns, these are telling us it's coming. I don't know what the picture is going to look like. This looked like heck. We had a topping tail on Wednesday, gap down, topping tail, closing at the low. It looked horrible. This is the same one, Greg, but the following day. So this was the gap down, and that was.
Can you go back 1 second?
Yep.
Okay. So I wanted to point out, this is what I was talking about before. It wasn't on the other slide. This was the deteriorating breadth while the markets were advancing and the sentiment had gotten up into this high extreme. And then over here, it was still at an extreme. And so when it looked like it could go higher here, I said, okay, maybe the breadth is going to give us a signal by coming up to the highs, and it didn't. And then, you see how it broke down. This is just the day-to-day of this moving average down here, which is, someone had asked what it was. It's just a total put-call ratio. And this is just a 5-day moving average of it. And we just simply look at when they're in alignment to give us a signal.
Same internals, but a day later. So this was last Friday. We got a beautiful gap reversal on volume with our signals. So now I'm going to start showing you about some trades that we took. Let's talk about different patterns of how we want to trade a crashing market. Again, I'm going to be talking about longs only for swing trade, because any day trade, any shorts that we take are purely day trades in our green trading room. This is what we call, and we've gotten a ton of these called climactic buy setups because of the market obvious tankage. So the question is, when to get on board a climactic buy setup? You can just do it over a prior bar's high, but maybe Greg can elaborate what, the formula that you were discussing in the green trading room.
Yes.
And so so you give them the formula here, but here I just wrote, deep move, higher low. But go ahead.
It's not a formula per se. Okay. Point is, this is personally what I want to see, because I'm looking at intraday charts, meaning, yes, what Dan was saying, this climactic move to the downside, the trigger is trading over a prior bar's low, high, I should say. Now, this has a green bar. So you could say, okay, if you wanted a green bar, you could let it trade above the high of the green bar. But above the red bar is an early signal. Now, when you do that, you're going to be entering over here, right, or somewhere around here, which could lead to some whipsaws, which it's going to, if you don't give it some leeway, you're going to get, stopped out and probably see it go up because it's already extreme. So what I like to see as an intraday trader combining this concept of a climactic is for the hourly to spend, some time going sideways and make a higher low and in some kind of pattern here. We don't really know what it's going to be beforehand, of course. So what that would require is at least 2 days of spending some time down here. And so this green bar could be a red bar, it could be a bottoming tail bar or whatever. But on the hourly time frame, it's going to have a little bit of a base that then it starts to lift off, and that puts me in alignment with my bias from here. This is just proven that it's gone sideways for a while. And we started at the beginning. These pictures are a display of psychology in motion, what people are thinking. So people are scared to death, right? They're selling, get me out of this thing, whatever the price is. And then here, they still convinced it's going to go down, and it's stretched, and it begins to stabilize. But over some time, just to say that this fear begins to dissipate a bit as this builds this base, and it gets away from resistance, which makes it a little bit easier to go up. Whereas from here, they tend to go up and back down. And so I just rather wait a little while. Sometimes I'll miss the trade.
Right. And I'm going to show you some examples of how, our subscribers benefit from Greg and me watching the market during the day and waiting for great setups. So this one, we had a beautiful 15-minute setup to give us an even better entry based on the hourly. This is what we call a 180 reversal. And then we have a bullish 1, 2, 3. These are all patterns Greg teaches in the swing trading course. And so we have 3 time frames saying that was a fantastic entry to get on that tanking stock. I'm going to show you some put spreads that we've been doing. And these are also patterns that you can keep in mind of how to get on board stocks in a tanking market. This first one, you might say, well, the market's been tanking. Why are you showing an uptrend on a pullback? Well, there are some stocks out there showing relative strength doing exactly that. They could be just on their own page. Some of these coronavirus stocks are bullish, whatever. That would be a way to get on board. Breakout, this one is what Greg mentioned would be our favorite actually on a retest pattern after this market tankage. And preferably we like a new low because that's an additional washout retest. This is what we call a price void because of the way it tanked. Then that's a beautiful bottom right there. This one was trying to bottom, breakdown, 2-bar reversal. That's another beautiful picture. This one was trying to bottom, bottoming tail. So these are all patterns that we would be looking for to trade stocks, but they're also beautiful patterns to sell these put spreads. And that's what we've been doing a lot of over the last couple of days. We're just, so when the VIX rises, as I showed you in the other slide, these put premiums are off the charts expensive. So we use our strategies to say, yep, this is a good time to sell an out of the money put. We buy a further out of the money put. That's what we call a bull put credit spread. And where the goal is to keep that money as long as the stock just stays above that short strike.
And this is the essence what Anthony is saying there. He made money on the SPX again today, selling a spread that expires today, and Dan covers that in the Mastering Credit Spread course. Yep. And how to manage that, and it's an awesome course.
So this is another concept that I want you to keep in mind as we go through these charts and we look at real charts. Concept of relative strength. I grabbed these charts today at 10, 11 a.m. This are the spiders, big mess. There's our collapse. There's the Friday's bar I showed you. This was Monday's bar. Ugly close on Tuesday. And here's where we are, but we'll come back to that when we look at it. Look at this stock, safe. It's in a beautiful uptrend, rising 20, 50, 200 to all-time highs. So when I showed you on the other slide, how am I going to find a buy setup? Well, there's a buy setup right there, showing relative strength to the broader markets.
Dan, go back to that. Oh, you can do it on this one. Miami, there you go. 1, 2, 3 setup. So while it's a big gap, which doesn't make it ideal, you got a wide range bar and a bar in the lower part of the wide range bar, and then it was a continuation. So That's just the concept, but just to show you one.
We can go through a bunch of these quickly, but I'm just going to show you many examples. Every single one of these are trades that we gave to our subscribers. Over a 2-day period, we gave over 20 of these credit spreads. All 20 were profitable. This is an amazing time for this strategy. I'll just show you how to read this. This is what our subscribers see. So we're going to short, this was February 28th. So this was Friday to Monday. We're going to sell a bull put credit spread. We're predicting this low is going to hold over the weekend. That was our only prediction. So we sell the 285, we buy a 275, took an $1.38 a share. It's a pattern that we call gap and snap on volume. Oversold market internals. We have our stop loss as we always do. This expired for full profit on Monday. Expired worthless because we were way above 285. Last Friday, think about this, folks. And Greg, I like getting your opinion on these. So this was during the day. Look at this, folks, at 109. Well, actually, I don't know what time we entered it because this 109 was when I sent this adjustment. So we have a bullish gap and snap. There's only a few hours of the trading day. Greg, let's just hypothetically say this was 285 at the time, right where my mouse is there. What do you think the odds?
295.
No, on this one right here, we shorted 280, naked puts.
I know, but you're saying you had your mouse at about 295 and you're saying, let's assume it was at 285.
Yeah, I got it, 295. Let's just assume my mouse is there. As a technician, what do you think the odds of this pattern closing above 280 for a couple hours?
With a couple hours left in the day, virtually 99.9%.
So we took in 95 cents a share when I sent this alert at 1:09 p.m. So let's just say we sent the alert at 10 a.m. So 11, 12, 1. In 3 hours, we made 85 cents of our 95 cents. And I said, let it expire worthless. It looks great. So that was a 0 DTE trade. Climactic buy setup here on the daily, Goldman Sachs. You can see the weekly chart. It's on support. We sold a 190. Way down here, we sold a 190 put, bought a 180 put, took in $1.10 a share. It's yours to keep as long as it stays above that. We actually stopped out of a bunch of things yesterday with the ugly reversal, but all of them stopped out at profits, every single one of them. Trevor, yeah, we do what we call 0 DTE trades, and that's putting on a trade where we are betting on the high or low just for a couple hours, like exactly what I just showed you there on the spiders. XOP, this is a trade we're in. Nice bullish reversal on volume. 4 days, we're just saying we think it's going to stay above 14 bucks. That's it. That's the bet we're making. Debbie here has been with us for a little bit, so I just threw all her. This was a big testimonial she gave us. I've been with you guys for a year. Endless education and real-time trading ideas and coaching. She's in the green room with us. She loves that. Greg mentioned bar by bar analysis earlier. So, you know, we love helping people. Microsoft.
What happened there?
Excuse me?
You're when you stopped talking, I guess your internet bounced.
Yeah, okay.
Hear you.
All right, so Greg, this one came from you. You said this was last Friday. Here's a 200 period moving average. And we said, yeah, I wouldn't mind owning Microsoft at $145. So this is a strategy of ours where we don't mind owning quality stocks at a significant discount. So we're selling this. We're selling a $145 put when the stock's at 162. So what's that? $17 away. And we're taking in $2.45 a share. So if we're required to buy the 145, because that's what we do when we sell puts, our cost basis is 142.55. And you can do the math on your own of what percent discount that is. Here's another relative strength buy setup. I have no idea what this stock does, ENPH. Pull back here to the rising 20. Now I'm going to show you a couple of these. I grabbed pictures of these quotes. So if you all wanted to take a screenshot, you know, you can look at them, but the amount of premium has been incredibly high. So the stock's at roughly 49 bucks. We're telling our subscribers, you know what? Let's sell the $37.5 put way down here. So we're selling this one, we're buying this one. This is think or swim, and this is what my order entry looks like. I'm selling to open the March 20 37.5 puts. I'm buying to open the March 30s. The midpoint is 60 cents a share. I told our clients, hey, because this was over the weekend, this was in our weekend letter that closed at 60. Try to get 53 cents for it. And in this case, I say, you know what? No stop. If we have to buy, just like I showed you in Microsoft, if we have to buy this stock at 37.5 and we've already taken in 53, 25.5% discount that we're owning ENPH. These are real numbers. We're in the middle of this right now. Another example, Bill, same as the other one. So I'll go faster here. We sold the $45 put way the heck down here. So we're selling the 45, buying the 35, midpoint 70 cents. We got in at 60 cents. It's an amazing environment now. These were two 0 DTE trades that we gave last Friday. Apple, we have our nice gap and snap again. Greg, I think you're the one that brought this one to my attention. So this is an intraday 5-minute chart. This is what Greg and I call a no-brainer. This was the market open, rallied, retest, no follow through to this ugly red bar. These are all, I'm throwing all these concepts at you because that's what Greg teaches in the Master Trader Strategy course. You put all these concepts together to come up with a conclusion. 100% retracement, going sideways, bullish engulfing, bullish consolidation, this very next bar. We sold an out of the money put spread for 80 cents a share. All it has to do is close above the low of the day. And if you do a 10 lot, that's 800 bucks in your pocket. This one, same day. Google, gap and snap off support. Here's our same bottoming pattern in the morning, right after 11 o'clock, it broke out. We said the short strike was $22 away. And we got $1.90 a share for selling this $20 wide. Amazing premium, amazing setups. We do these all the time, but we aren't going to get as many of them, and we're not going to get as much premium as we're getting in a low volatility environment. This is our weekly options trader where we issue all these trades. I mean, we give them in both our letters, of course, but the weekly options trader is just totally focused on selling short-term credit spreads around the charts that expire 10 days or less. Another example. Now this one, we actually said we're going to go out 3 weeks to expiration. The stock's at 296. We sold it over $20 away. And look at, I'm showing you these quotes because they're very, very juicy. The 275 out of the money puts, that's my position. I was in this, so I'm short the 275. I'm long the 255, and it's a bull put credit spread. We make money day by day through time decay. We make money as the stock goes up, and we make money through, remember the high VIX? As that VIX contracts, these premiums are going to contract. These are some trades we're in. The cruise lines and the hotels and the airlines have gotten killed. Climactic buy set up here on Norwegian cruise lines. We sold, folks, the $22.50 puts, which is below the IPO price. Look at this monthly chart. $25 back in 2013 is major support. We would, the 22.5s, if you pull up the option quotes, are the farthest away. 38% cost basis discount. RCL, similar, we're in a bunch of those, but the spreads are really wide, so you got to kind of play a little market maker with those. One or two more slides here, and then we'll look at the broader market. Now, I just want to show you how Master Trader uses the charts and volatility to focus on, are we focused on put spreads or call spreads? We're talking today about spider mini crashes and spike volatility, right? So Master Trader, what I've been showing you, we're selling put spreads on the spiders. We've been selling call spreads on the VIX, the VXX volatility ETF. But there are some quantitative option traders where they tell you, hey, whenever volatility is high, because they don't read charts, sell both put spreads and call spreads. So Greg, looking at a climactic buy setup on the market with oversold internals, would you be selling call spreads?
Well, I think Trevor asked, there'd be no premium in it, but what they typically do is they sell or they buy puts, that 1, 2, 3 on the spiders, the wide range bar that dropped down. They fade that, and that's the hugest mistake. Or even over here, what I've seen them do, and you've pointed out most of the time, is that they're fading a move like this. That's just starting the move, and that's where they're perpetually rolling and getting killed.
Well, every one of these stars that I'm showing you here, even though, yeah, some of them might look like breakdowns, if you look at the chart earlier from 2018, where I showed you the VIX and the market internals, every single one of these had oversold market internals. So as this box says, we would only be focused on selling put spreads.
Hey, Dan, as a point of clarity, with market internals, oversold really isn't an appropriate word because it's not an oscillator. It's more to say it's reached a bullish or bearish extreme because it's a gauge. Okay. It doesn't, where a breath will tell you that, yes, a lot of stocks have moved to an extreme, but just like we saw it get to a historical extreme around minus 200, it went to minus 350.
Right.
So, just to keep people on the right track, we don't care about oversold or overbought. We're used to using that terminology because it's so widely used. But as far as internals are, it's really just saying that historically, breadth or sentiment has reached an extreme point where the markets have reached, a high probability turning point.
All right. Yeah, I've been using them synonymous, but I like your terminology better. All right. So do you want to tell them about your course here?
No, I think they can read it there, and I think they'd rather us go to live charts. Okay. I can just tell you it's phenomenal.
Right. and all of your subscribers say it's phenomenal. And just to add, I'll add two things. regardless of what your level of sophistication is, a brand new newbie coming to the market or seasoned veteran with 2 to 3 decades of experience, I promise you this course is going to drastically escalate your understanding and appreciation of our approach. And once you're done with that, you have all the information to objectively interpret, as we've been going through these charts and as you're going to see us do right now, objectively meaning it is what it is. I've shown you a lot of credit spreads above. You can go to mastertrader.com/spread trader. We have a 5-module course, an incredible 12-module, a detailed one, and then the platinum, where you get 3 months of the green trading room, and also 3 months of our weekly options trader, where you see all these trades in real time. You get them through email and Telegram text intraday. Perfect. 12:45. Let's look at some charts.
Okay. Debbie, did we pay you to say that? I'm getting some alert. LK Coffee Shop is going up here.
All right, let's look at it.
1 second here.
Even a Tilray dog was getting a bid here.
All right. Where is my screen share? Oh, down here.
Yeah, Chris, Ray, if and others, if you can put your drop down to all panelists and attendees so others can see the questions.
No, it was just well, we're looking at the cues here. I'll show you what the alert, why it went off. This stock took out this high here. So something that's been showing relative strength, and I set the alert to see if it would actually turn back up again. And if it looks like this at the end of the day, it's gonna we could see the hourly, it's gonna go up.
And for Trevor, that's a 1, 2, 3 on the hourly also. And thirdly, this would be a great candidate to do a bull put credit spread. Today's Wednesday, so we only have 2 days to expiration for Friday. And as long as the market's holding up and closing near the highs, I'm going to be giving many more put spreads to our subscribers. And this is a candidate. So I then would go through our checklist, make sure there's no earnings, make sure the spreads are tight, make sure I get good premium.
All right. Earnings on this, not until November. All right. Taking requests. 1, 2, 3 example as you go through charts. Oh, Dan just pointed out one. Here you go. Wide range bar. Wide range bar. You know, it did come off the low, but a wide range bar, an inside bar consolidation. It's up at the top of the range here. And so that says it's going to go higher.
And in Miami, email me. I published an article on this subject that will answer every one of your questions on it.
This has gotten really messy in news on this. And wasn't this along in the letter, Dan? Like over here or something?
Yeah, it was over this red bar, and then we just sold the gap up.
Oh, over this red bar.
Yeah, so we were in it one day, sold it the next.
Yeah, that was a great one.
Yep.
All right, SPY. You know, SPY taking out the high of the day here. You know, I get it could be the start of something, but you know, maybe it takes out the high of the day. You can see here, it's just been in a trading range all day. Look at the hourlies here. It's exactly what I suggested pre-market was likely to happen, and there we go. Just chop. You go back to the recording on YouTube and listen to what I said.
And we don't like trading here, you know, around 1 o'clock. But if it can continue in this range and then break out after 2:30, then I'll be more excited.
And if it breaks below this range, I'm going to be as much excited. But if it takes out this high, it could go back up to the high of the red bar. But you know, again, the odds here, right? We're odds traders, is that this big drop and that nasty bar is going to find sellers. So while I'd be willing to do this as an intraday trade, I'm telling you, if it was to break out and come right back in again and fail, I'm hitting the bid, expecting it to go through here. So.
Well, Greg's on the daily, why don't you show them or draw just different flavors of what would make you more excited to engage, either as a swing trade or core trade, bullish, what bullish setup. We talked about the double bottom with a new low plus.
What would get me excited?
Yeah, it's a total mess now, but
would be for it to come down here and form that pattern. Then I would want to go long. Because historically, that's the kind of pattern that happens after a drop like this. Blood in the street, stops getting hit, margin calls galore, you know, lower low and reversal. And we'll see, you know.
Look at, yeah, I mean, look at MJ, just because I'm seeing it rally here, but this would be another put spread candidate if it closed strong. Just for, you know, Friday put spread.
Yeah, there was premium. I mean, I guess because this is volatiles, they're usually premium in this stand for a low price stock like that.
Everything is juicy premium for the most part because of the high VIX, VIX. Yeah.
That's fantastic. I mean, for spreads, I'm looking for something here. You know, sometimes, you know, Dan, you and I go through, you know, 20 charts before we find one with premium, you know, before recently right now.
Yeah, but now we're in a candy store. That's what I've been saying since last Friday. On Monday, I gave 22 or 23 credit for us. So we're in a candy store environment.
I don't know how you keep track of them all, to tell you the truth. I mean, what you're doing is amazing. There's just so much to keep track, and you keep up with it. And yeah, I'm trying to find something to share with everybody, which we shared in the room yesterday. Yeah, so people can get a, you know, an idea of what we kind of information that we provide to our subscribers. You know, just that's one video that people can watch that I made, you know, public if they want to watch it. You know, that was in that, you know, that was in Saturday's letter. It's a little long, you can, you know, but if you want to see, because you typically not that long, but it was a lot to cover because of the market drop.
Hey, look at NVIDIA breaking out. I gave that as a put spread this morning. I see, you know, a number of things breaking out right now.
What was the symbol again?
NVDA. Now, what I liked about the daily is the concept of relative strength. So you tell them what I liked about it.
Well,
put spread.
I will show them. As they say, a picture's worth 1,000 words. Why did it do that? It's not what I wanted.
And we, you know, I gave a call spread on the VX.
I didn't want to overlay it. Hold on. Let me clean this mess up if I can figure out how to do it. I've never done that before. Okay.
Yeah, NVIDIA has a beautiful 5-minute breakout as we were talking. And I looked at a ton of 15-minute thumbnails. I look at 26 ETFs. I look at the FANG stocks. I have 10 others here, and that's how I saw MJ breaking out.
Okay, this isn't exactly how I wanted to show it, but you can see here the green bars are the NASDAQ 100 ETF, the Qs, and you could see how it sliced through this low and all down here, and NVIDIA held that low. So we don't need indicators to show relative strength or weakness. NVIDIA showed relative strength even though it got shellacked on the downside. Percentage-wise, you know, that's a pretty good move, but it held its major support where the Qs violated its major support.
And just to add to that, another concept, we haven't mentioned moving averages all day. This still has a rising 20, 50, and 200.
Yep.
If it closes like this and the markets are in a good mood tomorrow, this looks like a directional trade for us for 1 or 2 days. Looks like it can go to, you know, 290-ish, just eyeballing it.
Okay, what else? NVIDIA IRM, Debbie wants to look at. What was that, Iron Mountain? Yeah, that's a dividend play if I remember correctly. Yeah, it's a REIT. It looks like the REIT ETF that I shared with you today. It got crushed. It's coming up, you know, about halfway, and there are going to be sellers here. Going to be some sellers there. What else? I can't have futures on this platform, but spiders, long scalp. I don't think so, Paul. I mean, I guess you could. You're nimble. You know, you're McGraw. You know, the fastest trader in the world that we know of. And yeah, it could pop up a little. You know, put a stop initially below the wide range bar and see what it does.
Twitter, Microsoft.
No, Ludwig, it's not. There's a void, but it's gotten crushed. Typically, things that fall like that do not make V bottoms and go back up to the high. Typically, historically. Chance of this being up tomorrow, it could be.
No, I thought she meant the market. Debbie, the market or IRM?
We'll see where the market is at the end of the day.
Right. I agree.
You know, it's early. If you know, look at the hourly chart. If you know, it's in the middle of nowhere. You know, I mean, if it rallies up to 310 and it holds there, I would say, yeah, then probably so. It's just an inside day, you know, but as day traders, we get excited about the stuff that's going on. That's, you know, the minutia of what's really going on in the big world here. Right? This thing has gotten crushed. Right? It's got busted ankles and kneecaps, and you know, we're getting excited about a 5-minute chart, which is okay, but keep it in perspective. Right? Twitter, it's a mess. It's had some positive news recently, but
Stay away.
it's kind of a wild thing lately. I mean, look at I remember us looking at this here, Dan, or maybe even had a long in it.
We did.
And got smashed and back up. You know, it's just like, man, this thing better come with some Alka-Seltzer. You know, why bother when there's so many other better looking things out there? Microsoft, I'm telling you, I don't know if it's going to happen. But if Microsoft is at its 200 MA and the market is taking out Friday's low, as a long-term investor, you want to own it there.
I agree.
You know, and if it comes down there, probably, you know, the naked puts at 130 will be, and 135 would be no brainers.
You got it.
You know, so there are plenty of opportunities that are ahead for those that know what they're looking at. For intraday traders, those that are nimble. Markets are volatile here. Ranges have expanded. So as an intraday trader, you have to have the discipline. If it's not working, cut it loose. Yes, you could be right the next day, but between that point and the next day, you could lose a tremendous amount of money, and you'll probably be covering at the high and selling at the low. So, you know, realize the ballpark that you're in and where the fences are and so on. And, you know, if you're a day trader, be a day trader. If you're a swing trader, or, you know, which there aren't many swing trading opportunities here because of the volatility and the move. But look, if when things set up, you have to have a clear head to take advantage of that. And if you've just been like, the ping pong ball that just got slammed back and forth, you're not going to have the wherewithal to do it. Right? GLD.
And that's why we're also so excited of the put spreads, because they're easier to trade. We're just picking a bottom instead of getting caught in the ping pong that Greg's talking about.
Exactly. So look at GLD. I mean, it was doing great. It got extended, a gap up. Made sense for it to get sold. Not that it said it was going to come down that far, but it's the market volatility. There was no place to hide. There was no place to hide when the market came down. Even the solar ETF, which is showing relative strength, got shellacked.
Corona stocks actually were rocking.
So
coronavirus.
You have to have a plan. You have to have a method. That's what Dan and I provide. The education to look at the charts, to understand them in multiple time frames, market internals, intermarket analysis, right, which can be used for day trading or swing trading, but even more so to understand that intermarket analysis, for your investments. What's the yield curve doing? What are those market internals doing? What's happening between sectors and so on? So, there's a tremendous amount to learn, but you can't digest it all in one sitting. And we all want to do that, and it could be overwhelming. So you have to take it slow. We can offer a lot of education and knowing how to do whatever it is you want to do. But again, take it slow. That's why the courses are actually recorded, so you can watch them 24/7, rather than how we used to do it years ago in a weekend, which you'd go there with your head exploding with so much information. Whereas today, you could say we have one subscriber in the green room that says he spends a half hour or so listening to MTS every day. And that's fantastic, because after a half hour, you're like, okay, I got it, it's enough. And the repetition is what drives it all home. And so little bite-sized pieces, digest, practice. I think that's been my word lately, Dan, telling people practice. Good. Intraday trading requires practice, because you're in a Formula One intraday trading if you're going down to smaller time frames, especially. But you can see the hourly chart can be very quiet, and the 5-minute chart can have a lot of movement. The lower you go in time frames, the more the movement, and the more difficult it's going to be for you to digest that. Terry had asked about a monthly chart, which I forgot. I don't know what it was. I think it was the broader markets, but just month going at the monthly charts here. Big red bar. A lot of damage. It hasn't violated the trend, but this is suggestive that it could. Not that it will, but it could. This big red bar suggested it was going down here. It didn't. Right? So you have to have a method that allows you to adjust and not think ultimately this is what has to happen. It doesn't have to happen. We're odds traders, about probability, and that's what we teach everybody to do. Right? So we'll see if this actually follows through or not. So with that being said, another one.
Perfect.
Done. We'll be back next Wednesday, and all the best. All right. We'll talk to you then.
Thanks, everyone. Good trading.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.